Hey there, everybody. June 4th, the market update desk with Scott Riley, brought to you by Mortgage One. It is a really good day in the market today. The first of the jobs numbers arrived today, and it is definitely something that is helping bonds and mortgage backed securities. Let's break through these numbers here. Stocks and bonds are both higher after a weaker than expected JOLTS report. Additionally, 8 OPEC plus producers laid out plans to phase out, not phase in, but phase out 2.2 million in production cuts starting in September, just around the corner. What does that mean? It means they're going to produce more and is leading to a move which will lower oil prices, which lowers gas prices. That's going to trickle through eventually, probably mid third quarter on the inflation number. So as these production cuts phase out, we're going to see lower gas. That equates to better inflation numbers. Now, the JOLTS report, let's break into this here. The April JOLTS report showed that job openings continued to contract. Job openings totaled 8.05 million, which was a good amount lower than the market planned on of 8.34 million. Additionally, once again, we have revisions. It's every month, it seems like. March was revised lower from 8.488 million to 8.355 million. Now, that was the lowest level of job openings since February of 21. Leisure and hospitality, this is a very important category within all these jobs reports. Showed job openings fell 109,000. It's important because that's been the stalwart of these so-called job openings and job gains that we've been having for, the last 2+ years. The quit rate within the JOLTS report did remain the same at 2.2%. It's the 6th month in a row of quit rates being flat. That means people are afraid to leave their jobs, point blank. So the job market is not as strong as what the market has been indicating out there. Home appreciation, more great numbers. CoreLogic reported that home prices rose a very strong amount last month in April to 1.1%. That followed a March report of plus 1.2%. So we can see the continued escalation of home prices. Year over year, home prices are up 5.3%. I think that's definitely conservative in the West Michigan market. Black Knight, which is another of the major reporting agencies, showed home prices up 0.3% on a seasonally adjusted basis, but a 0.9 in a non-adjusted March. So the non-adjusted is the one to focus on there. On the technical aspects of the market, mortgage-backed securities broke through a dual ceiling of resistance at a very tough Fibonacci level and a 100-day moving average. These are very, very significant events. If we can sustain this move, the next stop is about 40 basis points higher, which what does that mean? It means better mortgage rates. The 10-year bond moved down and is now hovering around 4.31%. It's testing a very important, very tough 200-day moving average. So we also had a stochastic crossover within there in the last couple, 3, 4 trading days. So we've got good news in the market. These jobs reports are coming in where we want them as far as for the market and mortgage rates. Tomorrow's the ADP report. It's going to be very important. Friday's BLS report, the important thing to hone in on there is obviously what the jobs numbers are, but also what the U3 unemployment number is. If it climbs year over year, we could break through these resistance levels on the way to some very juicy rates. Give us a call. We'll help you out. We'll break all this down more if you need to. But the key thing here is we're getting better on mortgage rates. Give us a call. Help you get pre-approved. 616-293-2189. Scott with the Market Update Desk.